The US stock market opened in new trading week with a confident rise. The Dow Jones closed yesterday with a 2% gain, or 600 points up. However, the Nasdaq, that comprises the best performing stocks, closed with at least 1% growth yesterday. Interestingly, outsiders on Wall Street are at the forefront now, and leaders are lagging behind. Experts say this situation is common for the final bullish stage in the market. US trading floors developed a relief rally in response to the first round up on the new coronavirus variant Omicron. Investors found out that the new strain might be mild in terms of heavy cases and fatalities. It means that it does not bear risks in consumer activity and the traveling industry. The S&P 500, which is viewed as a barometer of the stock market health, advanced 1.2% yesterday. Hence, the index has regained losses incurred last week. Today, futures on the S&P 500 are trading at near 4,592. Our experts foresee a new bullish wave on Wall Street. So we assume the index could shift towards the upper border of the range between 4,560 and 4,630. While the US equity market is rebounding, the US dollar index is likely to remain in the narrow range for a while. Today it's trading at about 96.40. The borders of the trading range are between 95 and 90 and 96 and 50. The greenback is anticipating a US inflation report on Friday. Besides, the market is alert to the clarity on monetary tightening from the US Fed. The US dollar has not given any response to the rumors about more aggressive tightening. Today, the Wall Street Journal reported that the Federal Reserve is due to update the timeline for tapering the bond buying program. In the case of earlier than expected withdrawal of monetary stimulus, the US dollar will find solid support, but the stock market will be affected by this move. Growing oil prices stalled growth of the USD CAD pair. As a result, the US dollar loosened its grip against the loonie. Now the currency pair is oscillating in the range between 1.2660 and 1.2800. A further trajectory will depend on the trend of the US dollar and oil prices. Today, crude oil has already gained 1%. If the uptrend goes on, the USD CAD pair will extend its decline. For the time being, the pair is hovering at around 1.2730. Bitcoin has perked up, being able to overcome the important technical level of $50,000. For our reference, the crypto market tumbled following the turbulent week when global stocks and yields of benchmark US Treasuries slumped on Friday, December 3. At that time, crypto whales or large crypto holders began injecting tokens from their wallets into crypto exchanges. Nevertheless, it's too early to speak about the steady bullish trend in the crypto market. On Wednesday, December 8, the top executives of 8 major cryptocurrency firms will testify before the US House Financial Services Committee. This could push Bitcoin price down to $50,000. If the price does not sink below this level, experts predict its growth to $55,000. If the hearing is not successful, Bitcoin could drop again to $47,000. To sum up, while the US stock market trades quietly, analysts expect a new bullish wave. However, if stocks indeed rebound, there will not be enough space for growth. The market will be able to climb to previous highs. Alternatively, if on the back of soaring inflation and strong employment growth, the US Fed has to resort to early withdrawal of monetary stimulus, a correction will follow in the stock market. According to the Wall Street Journal, the central bank might bring forward the timeline for the reduction of bond purchases at the policy meeting next week. And follow fresh news on financial markets on InstaForex TV channel. See you tomorrow.